Hello and welcome back to Wilson Weekly. As always, we have Doc Wilson here with some weekly updates for us. How are you going today, Doc?
Yeah, good, Yasmin. We've got some very interesting news hot off the press. We've got the it's the last day of April, but we've got the April house price report, house and unit price report. So, as usual, my housing market and Infinity first with the latest. So, how have those low interest rates treated housing markets? Well, no surprise. We shouldn't be surprised that lower interest rate means higher house prices. And fingers crossed, perhaps for homeowners, mortgage holders, that will get another interest rate cut in 2 weeks' time. The jungle drums are beating very loudly that that's going to occur. So that will be good news again for mortgage holders, and will continue to refuel housing markets if that does occur. So also we're going to have a look at the latest labour market data, and that's the latest data for March. And that again will play into the decision making for the Reserve Bank. And is our labour market still strong? The February data was a little weak, which surprised a few, but have we bounced back? We'll look at that again. Of course, we've had this amazing run of holidays. Can we get out of the holiday spirit? I mean, it's been week after week. In fact, it's sort of unprecedented that we had a late Easter, and then that backed right up to Anzac Day. So weekend 1, weekend 2. And of course, this weekend, we've got that fun event, the National Election Day. So we've actually had basically no auctions for 3 weeks because everything's been distracted on the Saturdays. I'm not suggesting it's a holiday this coming weekend, but I think it is in Brisbane. I think there's May Day celebrations in Brisbane. So you Brisbaneites, Queensland people, have had a pretty good run over the last 3 weeks. You would have forgotten what the boss looked like, I suppose. So back to normal after next week, and we will then be well and truly heading towards the middle of the year. But it has been a disjointed April, but nonetheless, we've had plenty of sales, plenty of observations, so we've got some robust data to discuss today, Yasmin. So enough of the lengthy preamble. Let's get out of here and start looking at what happened over April with house prices. What do you reckon?
Amazing. Let's do it.
Let's do it. So my housing market is my brand every week in conjunction with the good folks at Infinity. We bring you the very, very latest in housing market data, not just prices and rents, auction clearance rates, etc., but also we look at all the key drivers for housing market activity, particularly in relation, of course, to what's happening in the economy. So we've always got plenty of news coming forward. And as I mentioned at the beginning of the show, we try to be the first with the latest. And that's what we're going to do today with our house price data. And we are all about, putting all those jigsaw puzzle pieces together so we can clearly understand what's happening in the housing market here and now. And, if you're making a decision, buying or selling in property, you want to make that an informed decision. That's what we're doing here. And it's all evidence-based stuff. So as I say every week, this is a clickbait-free zone. We will be getting the T-shirts out there, clickbait, big cross, that sort of thing. Only kidding. But we do try to give you factual insights into the housing market, which is a real positive because there's so much nonsense that gets spread around what's happening or the prospects of the housing market. And we only have to look at the sort of shenanigans that's been going on in the share market over the last month in relation to what's going to happen prospectively with US tariff policy, up and down like a yo-yo, the share market. But, house prices keep on keeping on. The housing market is solid as ever. And we'll certainly validate that with today's data. So it is the last week in April. Gee whiz, it's now finished 1/3 of the year. So we're through 1/3 of the year, heading into the middle of the year with May. And May will be a solid no frills, no breaks, no holidays, no distraction month for housing activity, except for the May Day holiday in Brisbane, but that's at the very beginning. And as I've already mentioned, we've got the prospects of an interest rate cut coming up in a fortnight again. the data, the inflation data, which comes out this week. We'll discuss that next week, and also look at what the prospects are for interest rates. So week ending Wednesday, April 30th. See you later, April. Hello, May from next week. We are looking at April house and unit prices, also the March labour market data, as I mentioned before, and the latest weekly auction results. Not a lot of auctions happening over the last few weeks, but we'll still have a look at the results to date nonetheless, as we do every week. So here comes the big drum roll. What happened for house prices over April? Well, it was another positive month for house prices, still rising after that February rate cut. First rate cut in a long time, beginning of the cycle. And you know what's really interesting about the rate cut that we did have in February? It's probably the first time we've begun a rate cutting cycle with such a strong economy. Usually rates are cut when we need a bit of a kick along with the economy. It's like just putting your foot on the accelerator when your car's just struggling to go up a hill. But it's quite unusual with such a strong economy to have a lower interest rate. So not complaining. Housing markets were just starting to look like they were running out of puff, needed to refuel at the end of last year after 2 years of pretty solid to strong prices growth. So in a sense, it's come right at the right time for sellers. And of course, most buyers are sellers and sellers are buyers, so it works all the way through. But it was another big month, in fact, a similar month for prices growth. When we look at the big picture, and we will in a sec, March and April tend to be bounce back months in terms of the housing cycle annually. That's because December, January, February are sort of months where we don't get a lot of action. It's holidays, everybody's distracted. And that means lower prices, because not only do we have fewer properties being offered, typically we have a much smaller proportion of higher priced properties. So no matter how you adjust it, it still affects price outcomes, as it should, because logically with a significantly lower proportion of higher priced properties being sold during the holiday periods, that of course has downward pressure on prices. But even though our methodology adjusts for that to some degree, we still have that seasonal effect in the data. So what that means is that we always get a bounce back relative to what the cycle's doing in March and April. So our April house prices have continued to rise following a rise over March. Interest rates are improving affordability. Of course, with a lower interest rate, you can afford to pay more for a property with a given income. And it's helping to support buyer confidence, as well as we're seeing with the number of sales that are going through. It was the equal highest monthly increase for the national house price, national capital city house price, recorded since April last year, and follows a similarly strong 8.8% result reported over the previous month. So this is the national chart. This is the chart for the national capital city house price. So what this is a weighted average. So what we do is we look at all the capital city prices over the period, and then we average it in terms of the weightings. Now, of course, that means that the stronger markets, or the bigger markets such as Sydney, Melbourne, and Brisbane, have a big contribution to this data because they have more sales occurring. But you can see that dip that we had, the seasonal dip there through January, February, and now the bounce back that's occurring in March and April. So what we do is we take 3 months of data, so that's the quarter. So we get lots of observations, lots of sales. So we need to get less volatility because we need as many sales as we can get. But then we move them forward month by month. So this month we're looking at the 3 months to April, okay? The median price for the 3 months to April, and then we're comparing it to the 3 months to March. So it's sort of a rolling median price model. And that's good because it gives us a clear sense of where the trend is. And we're not looking like back 3 months and then back the previous 3 months. We're going month by month. So it's a good model going forward. And our data typically follows the numbers from and the results from other major data providers. So, but it does have that sense of revealing what the underlying noise is in the data. So you can see there the rise in the national house price over April, 2 bounce backs following the weaker earlier year period. So let's have a look at the leaders there. The top performer was Adelaide. Adelaide looked to be weakening a little bit over the end of last year after a couple of strong results, a couple of years of strong results. But it was the leader, strong results for April, up by 1.4%. Hobart up 1%. Darwin up 0.6%. The Darwin market has certainly risen over the last 6 months, both for rents and for prices. So back in town after a lengthy period of subdued activity, the Darwin market. Melbourne and Brisbane up by 0.9% each. Sydney up by 0.8%. Similar results there. Darwin up, as I mentioned before, by 0.6%. But just focusing on 2 markets here. Firstly, Melbourne is clearly showing signs of coming out of the doldrums, both for houses and units, which we'll look at in a second. These are back-to-back positive results for Melbourne this year. We shouldn't be surprised because, as we do when we look at the end of the show with auction market results, we've known that the auction clearance rates in Melbourne have been higher this year so far compared to the end of last year, and are also higher than where they were a year ago. So that's always a good forward indicator of underlying housing market activity, and that's proving to be the case again with Melbourne up by 0.9%. Of course, we shouldn't be surprised by another solid result from Brisbane, because that Brisbane market just keeps on keeping on. So again, Melbourne, not too bad. 2 months in a row. Good early signs that that market is starting to recover. Still down by 1% over the past year, but that trend is now improving. And I would suggest on current indications that the Melbourne market will be back in the black in terms of annual house prices over the next couple of months. So wait and see for that one. Now, the other interesting thing, Yasmin, in the data is Perth. Now, Perth was the superstar of housing markets over the past 2 years. 2 years, some spectacular growth in Perth. It was clearly the strongest market of all the capitals last year and the year before. Over the longer term, it's coming from a sort of a low base because it was a very subdued market over a period of nearly a decade following the end of that big mining boom. But it's made up for that to a large degree. But just recently, we're starting to see that activity waning. In fact, if we remember back to the March data, Perth actually fell over the March quarter compared to the February quarter, which was quite unusual. And this month, similarly, just up by 0.1%, Perth, and a clear underperformer there, except for Canberra, which fell by 0.1%. So some signs there that Perth market, after certainly booming conditions over the last 2 years, has now reached its cyclical peak in a sense. Affordability issues, confidence is just starting to ease. So it'll be interesting to see what lower interest rates do to the Perth market. But we can still see Perth leading on the annual results, up by 12.5% over the past year. Ahead there of Adelaide, up by 10.7%, and Brisbane up 8.8% still over the past year. But when we look at the 2-year results, it's quite spectacular. Look at the Perth median house price, still higher by 37.8%. Yeah, that's a big number. Perth homeowners would be pretty happy with that result. Brisbane, not to be outdone, up by 29.3% over the past 2 years. Great results there for Brisbane, and similarly Adelaide up by 27.9%. Those 3 capitals have clearly been the strongest performers over the past couple of years. And look, Brisbane and Adelaide are continuing to produce very solid results. But as I mentioned, that Perth market just looking like it's starting to run out of breath a little bit. But we'll wait and see what happens over the next few months in the Perth market. So when we look at units, big sharp increase again in unit prices over April compared to March. Again, some weakness in the unit market over that holiday period, January, February. but bounced back quite strongly, in fact, outperforming houses. National house prices up by 1% over the April quarter compared to the March quarter. The smaller markets typically produce volatile results because there's not a lot of sales occur in the unit markets in the smaller capitals. With Hobart up 3.1%, the leader, just ahead of Adelaide up 3%. Adelaide has a larger market than Hobart, but still a small market compared to the major capitals. And this is where the real energy is. So when we look at the national unit price, it really does favour Sydney, Melbourne and Brisbane because they're large unit markets. So they make up the majority of the vast majority of sales that occur nationally. So what happens in those markets generally dictates what happens with the national home price. And we can see a national unit price, and we can see there's strong results there for Melbourne and Brisbane. And this again is reinforcing the sense that Melbourne market is on the rise. It is on the rise, but whether it can sustain it and start getting back to the sort of annual growth figures that the other capitals have recorded. But Melbourne up 1.7%, good result there for Melbourne units. And Brisbane units, they just keep on keeping on, up by 1.3%. Sydney units is up, solid result there, up by 0.7%. But it's the annual data that we focus on here. And look at Brisbane units; they are the best performer of all the capital city units, up by 18.8% over the past year. Very strong result for Brisbane. As I mentioned, when I look at this data and talk about Brisbane housing market activity, the unit market was supposed to tank. So-called experts and forecasters were saying that the Brisbane market was saturated with units a couple of years ago, and that it would remain, underwater for the foreseeable future with prices falling. But the complete opposite has happened. There's still a queue kilometres long for people wanting to buy inner city Brisbane apartments, and that's why we're continuing to see price increases in that Brisbane market. And look how prices have increased in Brisbane over the past 2 years. No oversupply here, Yasmin, up by 45.1% in 2 years. The Brisbane unit prices, that is spectacular growth in anyone's language. And Perth and Adelaide, as I said, smaller markets in terms of the volume of activity, but Perth up 43.5% over the past 2 years, and Adelaide up 37.7%. So really, particularly strong results there for units, focusing on Melbourne and Brisbane as those larger markets, which produce some very strong results over April. So let's see if that energy in Melbourne continues on through into May, but certainly the signs are pretty positive for Melbourne units and houses. Brisbane just keeps on keeping on for both houses and units, but particularly for units. But that Perth market, again with units, up by just 0.3% over April compared to March. So interesting times for the Perth housing market, and maybe they're going to be favoured particularly by lower interest rates, because they look like they just need a little bit of a rest after a couple of years of booming activity. So if you want to get a copy of the latest My Housing Market April house and unit price report, there is a QR code if you're looking at the screen, and you can scan that with your phone, and it will give you a PDF copy of the report, which has full commentary and the outlook for the remainder of 2025. So get a hold of that one. If you scan that QR code, it will take you to the link. I just spoke a couple of extra sentences there to make sure everybody got a copy of that. So we move on, and we'll look at what's happening in the labour market. Now, of course, interest rates are very important for housing market activity, as we've seen through the April results, which validated the March results, which followed the interest rate fall that we had in February. All the banks are predicting an interest rate cut next week. Some of the key factors, of course, is the inflation data, and we're going to see the inflation, look at the inflation data for March, the March quarter, and the month of March next week. So that'll be really exciting. That's what the Reserve Bank focuses on, because, of course, we've come through a lengthy period of high inflation, which is now reducing for various reasons. and that's enabled the Reserve Bank to have some confidence that it can cut rates, which it has done, and it may follow up those rates. But it is looking at that rate cut with another one in a fortnight's time. But it is looking at closely not just at inflation, but how the economy is running generally. And as I mentioned before, it's quite extraordinary to have an interest rate cut, the beginning of an interest rate cut, a lower rate cycle, with our economy performing as strongly as it has. Now, the last labour market data, which of course was the February data, was actually a little weak, and it started to perhaps become even more of a driver of lower interest rates. So after a reasonably weak in terms of jobs growth and higher number of unemployed numbers, we were looking forward to the March result to see if there was some sort of a trend emerging in what has been a very strong results from Australia's labour market over the past couple of years. But what we had was the labour market was steady. The unemployment rate remained at 4.1%, which is a low rate historically. We created 32,000 jobs over the month, which isn't quite as high as the big numbers we were creating last year, but still it was a positive. Unemployed numbers were up by 3,000 over the month, which is lower than what we saw the previous month. But that was the reason the unemployment rate was steady, that despite that big increase in jobs, we had the number of unemployed rising as well. Jobs have risen by 308,000 over the past year, of course, fueled by higher migration numbers, but just reflecting how strong the economy is, because we're still creating plenty of jobs, and the unemployed is up by 40,000 over the past year. And that's why our unemployment rates have increased from the mid threes to the low fours, but still at the low fours. It's a very low number historically. The participation rate, which measures the proportion of the potential workforce that's actually working, remains steady at 66.8%, and the WA is the lowest again for the state unemployed numbers. So there's our chart. You can see when we look back to strong economic times, similarly, we're not far. We're very similar to where we were in the era of the great mining boom of the mid noughties there. So historically, still a very low unemployment rate, and of course, it's part of what continues to help drive our housing markets. And best of both worlds: strong labour market and lower interest rates, in a sense. So more positive news. Western Australia, again, the highest state the best state for unemployed, 3.6% there. Most of these states tracking around about the same level of unemployed, still quite low in the low fours, but a number of them, with the exception of Queensland, are tracking higher than where they were a year ago. But we know that because those numbers were really crazy low a year ago. So South Australia produced the highest jobs growth, up by 2.9%, with New South Wales, the underperformer, up by 1.7%. So good news there from the labour market. It's interesting, as I said, that we're getting a stimulus to the economy with lower interest rates, and yet our labour market is quite strong. And we did look at retail sales a couple of weeks ago, and retail sales are holding up as well. So certainly positive times. We know we're still living in a high inflation environment. Yes, inflation has fallen away. The rate of growth of inflation has fallen away, but that doesn't mean prices have fallen. It just means they're not increasing at the crazy levels they were over the past couple of years. So even though it's a relief to see a more normalised increase in prices are still high, and that means people, are doing it tough out there by and large, despite a very strong economy. So as I mentioned, we've had a funny old past 3 weekends or past 3 weeks for the auction market. We had Easter, and then we had Anzac Day, and now we've got an election. Agents and vendors like to avoid those distractions that happen over long weekends. Easter, Anzac Day was on the Friday. And of course, we've got the national election day this coming Saturday. So it means that we've just really had a handful of auctions. So yeah, results have been sort of whereabouts they were prior to the holiday distractions, but with fewer auction numbers, particularly higher priced properties. It means we have to take it a little bit with a grain of salt, these results. So let's see what's happened over the Anzac week. Generally, clearance rates were lower, marginally lower in most capitals. There are fewer choices for buyers, of course, with low listings and less competition for sellers over that Anzac Day holiday week. Again, we'll have a quieter week this week because we've got election day on Saturday. But let's have a look at what happened nonetheless. Sydney had just under 400 auctions, a little bit higher than the week before, which was Easter. Clearance rate a little bit lower, but still in the ballpark around about 70%. And when we look at the same week last year, which wasn't a holiday week, but nonetheless, the clearance rate's not too far away from where Sydney's been tracking in the high 60s, low 70s. Melbourne bounced back after a very skinny Easter break. Melbourne only had 146 auctions over Easter, lower clearance rate, which is due, of course, to just a handful of auctions there. But more auctions in Melbourne over the week, the Anzac week, 466 auctions. A clearance rate around about where Melbourne's been for most of the year, 67.4%, which again is higher than where it was a year ago. And Melbourne has been tracking higher this year so far compared to the same period last year. Brisbane, higher numbers compared to the Easter weekend. Again, around about that 40% mark in Brisbane, where it's been for most of the year, similar to where it was a year ago. Adelaide, more auctions in Adelaide, lower clearance rate, and certainly Adelaide's not performing as strongly as it did a year ago when it was producing almost record high weekend or weekly clearance rates. And Canberra down a little bit, just a handful of auctions again in Canberra, and we're still waiting for a consistent revival over that for the Canberra auction market and housing market generally, because if we remember back to our house price report, Canberra was clearly the underperformer over April again for both houses and units. So let's have a look quickly at the trends. Sydney's trend for monthly auction clearance rates tracking identical to where it was a year ago, despite all those holiday distractions, and higher than where it finished the year. So that's why we're seeing prices growth continue in Adelaide. And look at Melbourne, really up and about the Melbourne market. Of course, very low numbers this month in terms of the holiday distractions in Melbourne, but still tracking at around about the same level as a year ago, but higher than where it finished the year. So that's why we're seeing prices growth coming through in Melbourne, or it's an indication of why we're seeing prices growth in Melbourne. Brisbane, back to normal Brisbane with these clearance rates, still getting prices growth in Brisbane, but of course we're not seeing the record levels of auction activity we saw in Brisbane a year ago. Brisbane has a different auction culture to the other major auction markets, but nonetheless a solid result there, and holding its own in Brisbane so far this year, and we're seeing that with prices growth continuing. Adelaide lower than where it was a year ago, tracking around about where it finished the year. Still prices growth coming through in Adelaide, but not at the heady levels of a year ago. And as I said, Canberra, it's a bit like 2 steps forward, 1 step back, or 1 step forward, 2 steps back. You take your pick with the Canberra market, and that was a clear underperformer in the latest prices data. So we release the auction data every Saturday. This Capital City snapshot around about 6 o'clock, which gives you the headline data for the capital cities. That's on my LinkedIn account, which is Doc Andrew Wilson at LinkedIn. Get a hold of that. And on Sundays, we have the full national report, which has the regional breakdowns for Sydney and Melbourne and the top 10 sales for each of the capital cities over the week. Now, we haven't been running that because there hasn't been enough data over the last couple of weeks. But if you want to get a hold of the latest national weekly auction market report, that is a couple of weeks old because we haven't had the data, there is a QR code that you can scan to get a copy of. So we're going to finish off now, Yasmin, with our wonderful giveaway that we offer all of our listeners every week. And thanks everybody for taking advantage of what is a great insight into the housing market in real time. So we have the My Housing Market suburb data brought to you through My Housing Market and the folks at Infinity, which is a great little asset if you're wanting to understand what's happening in real time at the suburb level. We track every suburb in Australia. So with this app, and there is a scan for the app, or you can click on the link. You need to get a password though. Hey. And the good folks at Infinity will provide you with that password. And this is a great resource, as I said, not just for those that are thinking of buying and selling and want to know what's happening in the market in real time, but also those that are generally interested in housing market activity. And that's just about everybody, is it not? So it shows all the suburbs with data in Australia. So you can have fun with that one, trawling through all the suburbs. And it is about, we track asking prices. So it tells you what agents and owners are thinking about what the market will hold at the moment. So you're getting an insight into the analysis that occurs with agents and vendors in terms of asking prices. And that's sort of here and now, rather than sort of looking backward at what's sold over the last few months. And here's a screenshot, what we have for price. So you can filter for prices or rent. You can filter it for the state outside capital city region or the capital city region for each state. So what we're looking at here is prices, asking prices for New South Wales, Sydney region. We're looking at Blacktown, big suburb there, just as an example. You can filter for house unit or townhouse, and you can also filter it for the number of beds. I mean, how good is that? So you can really drill down to see what's happening. So we not only give you the median asking price for that suburb, we also give you the high and the low. So it shows you what the boundaries are asking between the high and the low and what the midpoint is. And we also give you the number of properties that are for sale at the moment. So it shows you how much competition there are for a 4-bedroom house in Blacktown right at the minute. Now we update that in real time, so you've always got the latest data going forward. So not only do we have that for prices, we also have it for rents. So you can look at, if you're a landlord or a tenant or an owner, understanding what your returns will be on your property. You can look at rents as well. So there for Blacktown, for a 4-bedroom house, we have a median of 750, a low of 560, and a high of 680, and there are 8 properties currently listed for rent. So this is fantastic stuff. So we talk about headline data in most of our show, Capital City Markets, but we also give you the opportunity to see or to explore what's happening at a suburb level. And yes, there's more, not just steak knife giveaway, but we also have something for the investors out there. So we're also now looking at the return on investment, that is the yields for the top 10 in those breakdowns, those regional breakdowns, either the capital city breakdown or the outside capital city geographical areas. So we can display there the top 10 suburbs for yield. So that's the return on the asking price, what the asking rent is currently doing. So if you multiply the rent over a year, the current rent over a year, and then you use that as a factor for the current asking price, it will give you the yield. So we look at that, and you can see there, they're the top 10 yields for Sydney 1-bedroom units. You can see Ultimo way ahead of everybody else, but that's because there's a lot of student accommodation in Ultimo in Sydney. But interesting, their yields are starting to rise a little bit in that Sydney 1-bedroom unit market. Some suburbs, they're pushing over 7%. And that's because we're starting to see rents growing again in that area and some easing in prices. But not only the yields, you also get the vacancy rate for each of the suburbs, current vacancy rate, the number of properties for rent, and the number of properties for sale. And if you look at the suburbs themselves, if you click on that link, hey, it takes you to a map of the suburbs. So if you don't know where the hell these suburbs are, just click on the link and it'll take you and show you a map of where the suburb is. Isn't that fabulous? Next week, we're going to look at April house and unit rents, the March inflation data, and as usual, the latest weekly auction results. And hopefully we'll have a lot more auction results to deal with now that we're moving into the, although we will be affected by, the election day. So we don't want to talk too much about the election. This is, I was going to say a no clickbait zone, but I better not say that going forward. And thank you very much, Yasmin. If you want to get a copy of this week's report, again, there's a QR code you can scan and get all the details for that. And we really look forward to seeing you again next week when we're into the mad month of May.
Amazing. Looking forward to it.